Everybody, my name is Yaman Tashtavar, and I bring you daily updates on Tesla, tech, and the markets. Welcome to Tesla Live. Let's get started right away. We have quite a few things to cover today, so I don't want to take any more time. And let's go. Markets are up today. Dow Jones is up 0.4%, Nasdaq is up 1%, S&P 500 is up 0.6%. Advancing issues are exceeding declining issues by about 2 to 1 ratio. New highs, 350 stocks are making new highs today, as opposed to 88 stocks making new lows. And 50-day moving average, 72 stocks are above their 50-day moving average, but the 200-day average is still more stocks are below that than above. Let's look into our heat map. NVIDIA is up 3%. All chip stocks are up today quite a bit. Tesla is also up 3.5%, along with GM and Ford up 2.5%. Everything else is pretty much mixed. Microsoft is up 0.2, Google is down 0.7. Let's continue with our daily article. Chip stocks lift Wall Street as investors await trade negotiations. US stock indices edged higher on Tuesday, helped by gains in Nvidia and other chip makers as investors awaited possible negotiations. Hold on 1 second. Let me put this up there a little bit more. Here we go. All right. In one more. All right. Okay. US stock indices edged higher on Tuesday, helped by gains in Nvidia and other chip makers as investors awaited possible negotiations between the United States and its trading partners for more clarity on Washington's tariff plans. President Trump and Chinese leader Xi Jinping are set to speak this week, the White House said on Monday, days after Trump accused China of violating an agreement to roll back tariffs and trade restrictions. The Trump administration wants countries to provide their best offer on trade negotiations by Wednesday, as officials seek to accelerate talks with multiple partners ahead of a self-imposed deadline in just 5 weeks, according to a draft letter to negotiating partners seen by Reuters. Trump said last week he planned to double tariffs on imported steel and aluminum to 50% starting on Wednesday, fueling fresh concerns among investors and hampering global stocks as they approach record highs. A softening of Trump's harsh trade stance allowed recovery in risky assets in May, with the benchmark S&P 500 and the tech-heavy Nasdaq posting their biggest monthly percentage gains since November 2023. The S&P 500 remains less than 4% away from its record peak touched in February. The markets are still trading on a decent level of uncertainty because they're not sure how everything's going to turn out, said Chris Zaccarelli, Chief Investment Officer of Northlight Asset Management. Having a best and final offer deadline and framework to move forward should be positive for the markets. On the flip side, information tech stocks led gains with a 0.8% rise, helped by a 2.7% rise in Nvidia. Chipmaker Broadcom rose 2% ahead of its results later this week. I also published an article on Nvidia. You can find this article on my profile, and we're going to go through the top highlights later in this live stream. Constellation Energy rose 3% after Meta Platforms said it had struck a power agreement with utilities nuclear plants. It lifted other nuclear stocks such as Vistra up 4, GE Vernova up 2, NuScale Power up 2%. A Labor Department report showed job openings increase in April. We're going to look into that later on. Central bank officials, including Fed Governor Lisa Cook, Chicago Fed President Austin Goolsbee, and Dallas President Laura Logan, are due to speak through the day. Monthly jobs data on Friday will offer more insights on how trade uncertainty is affecting the world's biggest economy. All right, let's move on to Tesla. This is an article published by Fred Lambert of Electrek. We're just going to read a summary. Tesla sales in Europe continue to decline despite the availability of the new Model Y and record discounts, while sales in Norway saw a 213% increase in May, which was highlighted, I believe, by Elon. Fred says, actually, the summary says this is compared to a particularly bad May 2022 and is likely unsustainable. So there's some base effects going on here. I see a lot of tweets, posts highlighting these huge jumps without noting that this is just one country in 1 month. And if you just zoom out either to multiple months or multiple countries, you see the trend is downward. Overall, Tesla's Q2 deliveries in Europe are tracking below Q1 performance. You can read the article later on, either on Electric website or pause this video and do so here. All right, BYD. This is Tesla's biggest rival around the world. BYD is growing extremely fast, while Tesla's sales are shrinking. BYD is also making more money than Tesla, and is also more vertically integrated into battery production than Tesla. And now they're also expanding into charging stations. And these charging stations are superior to Tesla. So in a lot of ways, BYD is also the technology leader than Tesla. BYD's 5-minute megawatt chargers are a big deal. 15,000 more are coming. This is an article by Inside EVs, which is a pretty reputable source, which this is a source that Elon used to like until they started publishing things that Elon doesn't like. BYD already has 500 of these 5-minute fast chargers up and running. Now, a lot more on the way. BYD teams up with 2 Chinese charging powerhouses to deploy 15,000, 1,000 kilowatt, 1 megawatt EV chargers in China. It already has 2 models capable of charging at that rate, with plans to launch more soon. So this is not just a promise in the future. Tesla promised megawatt chargers, I believe, back in late 2018, when they first unveiled the Semi. And I think there's only maybe a handful of them, and now it's semi-production, even 6, 7 years later. So BYD is already deploying these chargers, and it's not just for there are some big models. This is production model cars benefiting from these rapidly expanding fast charging network, truly fast charging network. 5 minutes is very important, right? Because that's how long it takes to fill up a gas. So this will truly expand EV adoption in China and elsewhere as well if BYD chooses to build these chargers in other countries. BYD is China's leading EV charging company, but competitors have announced they're working on 1.2 and 1.5 megawatt charging solutions. When BYD revealed its 1 megawatt 5-minute chargers in mid-March, it broke the internet. Everybody was covering it, arguing whether such high charging speeds were really needed and whether having a large network of such chargers was even feasible. But BYD didn't do it for the publicity and is pushing ahead with bold plans to have thousands of these chargers up and running in China. It already has more than 500 1 megawatt chargers operational today, which cover the most important urban centers in the country, but is partnering up with third parties to vastly expand the network. It recently announced it was joining forces with companies Xiaoju Charging and Longshan. The former has pledged to build or upgrade 10,000 charging points to 1 megawatt, while the latter has committed to an additional 5,000, although a clear time frame for when they would be ready was not provided. Both partner companies are big players on the Chinese EV charging scene with their own large networks, and while they build the chargers, BYD will supply energy storage to enable 1 megawatt charging, even in areas where the electricity grid wouldn't support it. So BYD, just like Tesla Energy, BYD has its own energy storage product, and BYD produces the cells that it puts into this energy storage, unlike Tesla in most cases. Only cars built on BYD's new Super E Platform 2.0 support 1 megawatt charging, and only 2 such models are currently available. Launched in April, but both models sold over 10,000 units in their first full month on sale. See, this is what I'm talking about. We hear about production hell, all these excuses about why Tesla can't increase production at a rapid pace. But BYD many times, and Xiaomi did the same thing. A lot of Chinese automakers ramped their production at an extremely fast pace. So there doesn't seem to be any sort of physical limitations, unless physics in China is different than in US, indicating that ultra-fast charging is a feature that buyers in China are seeking. We saw the former charging from such station in China and were blown away by how quickly its range was being replenished, says the Inside EV's author. It really is about as quick as putting fuel in a combustion car, eliminating one of the biggest downsides that drivers say was keeping them from going electric. BYD isn't the only Chinese automaker with big ultra-fast charging plans. XPeng has already deployed 480 kilowatt rapid chargers in China, with its goal to reach 800 kilowatt with its next generation of chargers. GAC Aeon is not among the big Chinese automakers mentioned by the Western press, but it is a charging powerhouse with its 6C chargers. I think Tesla is more about 3C charging, meaning they can charge 6 times quicker than the battery pack's capacity. So a 100 kilowatt hour EV would charge at 600 kilowatt. Zeekr, the Geely-backed automaker looking to establish itself as a household premium name in Europe, is working on a 1.2 megawatt charger, which, while tech powerhouse Huawei wants to take it to 1.5 megawatts. But while competitors are just talking about these ridiculously high charging speeds, the fact of the matter is BYD is a considerable lead with the hundreds it's already been in operation and the thousands more it has coming, as well as EVs that can actually use all that charging power. So even though Inside EVs is not naming Tesla here as the opposite side of this thing, it's so obvious as you read it. You can kind of feel it, what the author is thinking here. Speaking of Chinese automakers, the price of Xiaomi's YU7, this is a vehicle I've been looking forward to quite some time, will be revealed just 1 to 2 days before the electric SUV's official launch, which is, I think, coming in a few weeks here. And it will not be the rumored $32,820, the paper reported today, citing CEO Li Jun. The Chinese tech giant expects its auto business to turn profitable in the third or fourth quarter of this year, he added. It may be a lot higher, who knows, but I think it's still going to be cheaper than the Model Y. And the only reason why it has to be higher, I think the demand for this vehicle is going to be out of the wazoo. All right, let's move on to another Bloomberg headline about Xiaomi. Founder Legion expects its year-old EV business to turn profitable. So I often hear Tesla bulls talking about how Tesla is the only profitable EV automaker. This is not correct. Chinese are also starting to make money, and BYD actually makes more money than Tesla, bottom line, in China and globally, with half the price of the cars, which is incredible to me. So it kind of goes to show how important that vertical integration into battery production is. Xiaomi founder expects its 1 year old EV business. So it took Tesla, I think they were founded 2003, and they turned profitable, bottom line profitable in 2018, 19, so 15 years or so. And these guys are doing it in 1 year. A milestone for the billionaire's $10 billion endeavor in a cutthroat market. You can read that Bloomberg article later on your own if you wish. In other news, in Europe, German auto lobby VDA says our industry is highly affected by export restrictions on rare earths. We've talked about this issue multiple times before. Rare earth export restrictions are a huge risk for Tesla. This is rare earths are necessary for producing EV motors, and Tesla's production in China, US, and Europe can be affected if this tariff war goes on for longer. Germany's VDA says production delays and outages can no longer be ruled out. So I wonder if this is also impacting Tesla's Q2 production numbers as well. I guess we'll learn about that in just a few weeks here. I also want to highlight the resale price trends in Tesla versus the automotive industry in the US. According to Car Gurus, which meticulously monitors the price of millions of pre-owned vehicle listings, in the last 90 days, the average resale value of an average listing in the US automotive industry went up by 3.36%, whereas Tesla listings went down by 3.56%. And in the last year, whereas Car Gurus index, the average of the US automotive industry listing price, used car listing price went down by 0.4%, Tesla's went down by 8.8%. So that's 20 times. And it's actually worse for the Model 3 and the Model Y. Tesla really makes its money on the Model Y. So this does not bode well for demand for Tesla's overall. seeing all this negativity around Tesla's production and deliveries, I posed a poll. I encourage people to vote on these polls. And if you haven't gotten a chance to vote, please leave your vote in the comments in YouTube in the YouTube video, or as a reply on X as well. Your guess for Tesla deliveries in Q2 2025. Currently, these are the results. A lot of people expect less fewer than 325,000. I actually saw a reply today that says something like Tesla will deliver fewer vehicles than Q1, which was already extremely low. I don't think that's going to be the case, but 38% of the votes say so. Majority of votes say fewer than 350,000, and a few say higher than that. So you leave your vote. If you want to be more specific, you can leave a reply to this post or below the comments in the YouTube channel. And then I also have a production one as well. This one's a bit more bifurcated. Most people say fewer than 380,000 vehicles. I think this is possible. I think this is possible for the reasons that we discussed just earlier, whether it's demand issues or export restrictions for rare earths. So let's move on to NVIDIA. NVIDIA has an expense problem is the article that I published just about an hour or two ago on Seeking Alpha. You can read this article in its entirety. I'm just going to go through the summary points here. NVIDIA Corporation's revenue growth is slowing while operating expenses are rising faster than expected, undermining operating leverage assumptions. I also shared a DCF forecast for NVIDIA. Revised forecasts show lower revenue and higher operating expenses, leading to a $2.2 trillion intrinsic value, 38% below NVIDIA's current $3.5 trillion market cap. Consensus estimates remain far more optimistic than mine, with street net income forecasts 39% higher for fiscal year 2027 than my projections. Despite margin improvements, I reiterate my sell rating on NVIDIA due to deteriorating fundamentals and overvaluation versus realistic earnings potential. And there's a nice picture of Jensen Huang in here as well. All right, and next, related to this article, you can see here that the NVIDIA director, Mark Stevens, now this post says sold 4 million shares, but I don't think that's correct. He filed to sell 4 million shares. So he adopted the sell plan to sell 4 million shares, total value of $552 million. So it's a very significant figure, very important, very material. I highly recommend people keep an eye on this. NVIDIA director, Mark Stevens, filed to sell 4 million shares, today valued at $552 million. And here you can see the details of the SEC filing. He adopted a Rule 144 plan. All right. And just a little bit of macro. US job openings rebound in April, layoffs pick up. US job openings increased in April, but layoffs picked up in a move consistent with the slowing labor market amid dimming economic outlook because of tariffs. Job openings, a measure of labor demand, rose 191,000 to 7.39 million by the last day of April. The Labor Department's Bureau of Labor Statistics said in its Job Openings and Labor Turnover Survey, or JOLTS. Data for March was revised higher to 7.2 million open positions instead of the previously reported 7.19 million. So I actually expect this figure to be revised down in May. I don't think job openings jumped from 7.2 million to basically 4 million. So I expect that number to be revised down next month. Economist poll by Reuters had forecasted 7.1 million vacancies. Yeah, this is more where I am. I think the vacancies are going down still. Layoffs rose 196,000 to 1.786 million. Okay. Hiring increased by 169,000 to 5.57 million in April. All right. We're going to get so here's what it says. April's rise in vacancy was likely the correction following March's sharp decline. Okay, maybe, but I think the overall trend is downward. We're going to get a very important employment report on Friday. I'm going to be traveling later this week, so I'm not sure how I'm going to do this, but I'll make sure that I'm live at that period. And this week is the employment week. So I think tomorrow or Thursday we get the ADP report, and on Friday we get to establishment report and a household report for the May employment numbers. And generally speaking, I think the employment market is weakening, and this is not to be we can't really brush that away. I think that's a major problem. That's where the economy is going to head into. Um, Non-farm payrolls likely increased by 130,000 jobs last month after advancing by 177,000 in April. So this is kind of like stall speed. If it's less than about 100,000, then I think the economy is going to head into a recession. All right. On that note, thank you very much, everybody. And I will chat with you all next time. Take care.